Hello friends and welcome to StudyIQ. I am Joy and today we will be discussing about the RBI, that is the Reserve Bank of India, guidelines on small finance banks or SFBs. Let us first come to the current affair. In the current affair, we will see that the RBI, the Reserve Bank of India, has recently announced the final guidelines for on-tap licensing of private sector small finance banks. So we will see what is meant by on-tap licensing of private sector SFBs later in this lecture. So final guidelines have been given by the RBI for granting of licenses to private sector small finance banks. So in this lecture we will be discussing what is the objective of RBI. We will discuss briefly about small finance banks and its provisions, also about the payment banks and how payment banks and urban cooperative banks can convert themselves into small finance banks. We will discuss about the issue of financial inclusion. We will also discuss what is meant by on-tap licensing system. So all these issues we'll discuss in detail in this lecture. Very important topic from all examination perspective, especially for banking examination, UPSC, etc. So let us begin. Let us begin by understanding what is SFB, what is small finance banks, what is payment banks, also what is on-tap licensing system. So first coming to SFBs, that is small finance banks. So small finance banks, these are banks that offer basic banking services. So here the term basic is very important. Now what is meant by basic banking services? It is accepting deposits and providing loans. So these are the basic banking services. So small finance banks, they aim at a certain target group in order to provide basic banking services at very reasonable rates. So this is the purpose of SFB, and by doing that it tries to increase the financial inclusion in the country. That means more people or more institutions are brought into the formal financial setup in a country. So this is the purpose of SFB or small finance banks. So small finance banks, they undertake basic banking services including accepting of deposits, also lending to underprivileged and underserved sections. So that is why it is called small finance banks. So who is this underprivileged or underserved sections? That means those entities, small business enterprises, small and marginal farmers, also MSME, the micro, small and medium entrepreneurs, the unorganized sector. So these are all the underserved or unserved group. This is because they have lesser access to the formal financial institution compared to larger bodies or larger industries. So that is why they are called underserved. Now let us come to payment bank. Now payment banks on the other hand, how it is different from that of small finance banks. The payment banks, they are not allowed to lend. So we have seen that the small finance banks, they can undertake all the basic banking activities including lending and accepting deposits. But payment banks on the other hand, they are not allowed to lend according to the present rules. And also when we talk about the deposits that can be accepted by the payment banks, it is capped at 1 lakh rupees per customer. So payment banks have more restrictions in terms of accepting deposits and also lending compared to the small finance banks. They are not at all allowed to lend, whereas the deposit acceptance, it is restricted to maximum of 1 lakh rupees. So this is the guidelines given by RBI. Now third, we will come to what is meant by on-tap facility. Now on-tap facility means that the RBI, that is the Reserve Bank of India, who is the regulator of the financial system in the country. So RBI will accept applications and also grant licenses all throughout the year. Otherwise what happens is that there is a particular season or particular period when RBI accepts the proposals or the applications for providing licenses, and the licenses are also granted at a particular period of time in every year or in certain number of years. But on-tap licensing means at any point of time RBI will accept an application to grant license, and at any point of time RBI can even provide the license. So this is called on-tap facility. So these are the three things: the small finance banks, the payment banks, and also the on-tap licensing system. Now let us come to the key guidelines given by RBI. So first, regarding the payment banks. So the payment banks, they can apply for a conversion to a small finance bank. We have seen there are certain restrictions in the payment banks, like the acceptance of deposit is capped at 1 lakh rupees and there is no provision for lending. So if a payment bank wants to convert itself into a small finance bank, it is possible, and RBI has given its guidelines. So what are the conditions? First, they can convert into small finance banks after 5 years of operation. So minimum 5 years they have to complete as a payment bank. And secondly, they have to meet the eligibility criteria. Now, what is the eligibility criteria? The eligibility criteria is that the payment bank, it functions as a NOFHC, that is non-operating financial holding company. So in that case, they can convert themselves into a small finance bank, and the promoter of the payments bank, it is eligible to set up a SFB, that is small finance bank. Now coming to the capital of SFB, capital eligibility for a small finance bank. Earlier the capital requirement for a small finance bank was capped at 100 crore rupee. Now RBI has revised it. RBI has raised the minimum paid up capital requirement for SFBs to 200 crore from the earlier 100 crore. So a double increase has been made by RBI. This is regarding the capital requirement, the total paid up capital requirement. Now about the promoter. So the promoter should hold minimum 40% of the paid up voting equity capital for the first 5 years. So this is also eligibility condition, that the promoter of this bank should hold at least 40% of the paid up capital for the initial 5 years. And if the initial promoter shareholding is above 40%, it should be brought down to 40% within 5 years. That means if the promoter's holding or capital is more than 40%, then it should be brought down to 40% within 5 years. And within 10 years, this should be brought out to 30%. And within 15 years, it should be brought down to 15%. So these are the conditions. Now regarding scheduled bank status, so whether it can become a scheduled bank, scheduled commercial banks. So SFBs, that is a small finance banks, should be listed within 3 years of reaching a net worth of 500 crore. Then there is an option that they can be listed as a commercial bank or a scheduled commercial bank. So they will be given the scheduled bank status immediately upon the commencement of the operations. And also they will also have general permission to open banking outlets from the date of commencement of the operations. Now regarding UCBs, that is urban cooperative banks. So the RBI, the Reserve Bank of India, RBI has also allowed the primary urban cooperative banks to convert themselves into SFBs. So we have discussed about this earlier also. So you can find the video that I have prepared on the issue of urban cooperative banks to convert themselves as SFBs. So the urban cooperative banks, if they want, they can convert themselves as SFBs or small finance banks. And this is provided that if they comply with the guidelines or the licensing guidelines under the on-tap licensing requirements. So this is the condition. And also a minimum net worth of such SF will be 100 crore. Now this has been increased to 200 crore within 5 years from the commencement of the business. So this is the key guidelines given by RBI in this regard. Now let us see what is the rationale of RBI. So in the year 2015, in the month of September, RBI had given in principle approval to 10 applicants to set up a small finance bank. So 10 applicants were given license or granted license in 2015 by RBI. And now if we look at the status of those 10 small finance banks, we will see that the small finance banks have largely achieved the target of priority sector targets. That is, they have become very well in the performance with regard to meeting the priority sector targets. They have given loans and they have raised the financial inclusion in the priority sectors. We have already seen who are the priority sectors who are considered as underserved. So that is one reason. So it is understood that the SFBs or the small finance banks will be better able to meet the targets of the priority sector or the needs and demands of the priority sector with regard to access to finance. Now Second reason is that these small finance banks, those 10 banks that were set up in 2015, they also attained their mandate for furthering the financial inclusion. So the mandate or the very purpose of small finance banks is to increase the financial inclusion. And RBI also understood the point that these banks have helped in improving the financial inclusion in the economy. So this is the second reason, and these two reasons put together, they make a strong case for the entry of new players. So first reason, the priority sector will have more access to formal finance. Secondly, this also enables and increases the financial inclusion in the economy. So, considering all these, the RBI has thus issued the final guidelines for licensing of such banks throughout the year. So, we have seen on-tap licensing system has been introduced. That is, throughout the year, applications can be given and RBI will also grant licenses at any point of time in a year. And it is also understood that the small finance banks, they have the potential to provide an alternative to some of the existing institutions, and it can also contribute to increasing financial inclusion, also serving a variety of needs of unserved or underserved clients, for example the priority sectors, etc., especially in the rural area or semi-urban areas. So this is the rationale of RBI. Now coming to the benefits. So what could be the benefits if more number of SFBs or the small finance banks come up in the economy? First one, if the payment banks, if they get the license of a small finance bank, then they will have access to more deposits. We have seen that the payments bank, so these banks have restricted eligibility for accepting deposits, that is their deposit acceptance cap is limited to 1 lakh rupees. So if the payment banks, if they convert themselves into small finance banks, then they will also have more access to more deposits. So this is the first reason. Second one, this will boost the profitability. Now, right now, the payments bank, the profitability of the payments banks are in pressure. We have seen that many payment banks, they have concluded their business, they have winded up, and this shows that there is lesser profitability in the payment banks. One reason is that they can accept lesser deposits, whereas they have no option of lending, and this makes them very much vulnerable to risk, market risk, and also losses. So the profitability of the payments bank have come down considerably. And if the payment banks, they are able to convert themselves into small finance banks, it is sure that they will be able to get more profit and expand their business. So as they expand their business, the financial inclusion in the economy will improve. Also, the digitalization of economy will be easier. This is because payments bank provide a wide variety of services in the economy. So definitely the profitability margins and the financial inclusion will increase, and the economy will move into a digitalization. So this is the thing. Now another thing is the return on equity, ROE. So at the initial years, it is expected that the return on equity will reduce, but subsequently it will increase. Now what is ROE, return on equity? It is a measure of profitability of a business. So it is a measurement of profitability, how much profit a business has earned, and this is calculated by dividing the net income of a company divided by shareholders' equity. So this is the calculation of ROE or return on equity. Now let us come to the scope of NBFCs. Now, since RBI has given these guidelines, it will be easy for the NBFC also to explore the SFB model. So NBFCs can also adopt the SFB model. And why this is more important now? This is because there is a liquidity crisis or a liquidity crunch in the NBFC sector after the IL&FS crisis. So the NBFCs, the non-banking financial companies, can also explore this SFB model. So all these put together, we can expect a better response to the SFB licenses. And the point that this licensing system, it's an on-tap licensing system. Again, it makes more advantageous. This is because the licensing is on an on-tap basis. This means the NBFCs, the non-banking financial companies, they can finalize their business plans, organization structure, systems and processes before they apply for a license and ensure they will get a better success rate. Since this is an on-tap system, better planning and implementation can be done. Therefore, better success rate can also be ensured. And also another impact could be that the small finance banks, they will occupy the space that is now occupied by some bigger banks. So the small finance banks will become capable of occupying the space of the bigger banks now, and this will ensure that the marginalized section, the underprivileged, are getting more access to financial services and also credit. Now, what about the success? Now, the success of this SFBs, it will largely depend upon the quality of the asset. Now, for a bank, the asset is the loans given by the bank. So, the quality of the asset will be the prime determinant of the success rate of this small finance banks. And second factor would be the trust that they gain from the public. And third one would be the standards of governance and the regulations. So, what happened with public sector banks? It was governance issues or systemic issues that led to higher percentage of NPAs. So, it will all depend on governance, regulation and the policy that the banks undertake, which will determine their success rate. So, these are the factors that will determine their success rate, and you can find the PDF of this lecture on our website www.studyiq.com. You can follow my Facebook page for more video updates. You can write to me at joycey.studyiq@gmail.com for any of your queries and clarification. Thank you.